Understanding what tax bracket you're in can help you know what you can or should be doing to pay less tax. Now, there are a few different tactics that you can use to cut your tax bill, and which ones make the most sense will depend on which tax bracket you're actually in. So it's important that you're across this. Now, in Australia, there are 5 tax brackets that range from 0% tax to all the way up to 47%, including Medicare levy. So there's clearly a pretty big range there. If you want to know which tax bracket you fall into, the first thing that you need to get clear on is what is your gross or pre-tax income. Your gross or pre-tax income includes all of your income from all sources, including your salary, any commission, any overtime, any bonus payments that you receive, as well as interest income on bank accounts, dividend income on share portfolios, rental income on investment properties. Basically, all of your income from all sources adds up to give you your total pre-tax income. Once you have that number, you can then plot it against the brackets to figure out which tax bracket you're actually in. So breaking down these tax brackets, the first one is between $0 or $1 earned or 1 cent earned and up to $18,200. That tax bracket pays 0% tax. The next one is from $18,200 up to $45,000. That tax bracket has been sitting at 19% plus Medicare levy. It's being cut to 16% from the 1st of July with the new tax cuts that are kicking in. Then above $45,000 and up to $135,000 under the 1 July tax rules, the tax rates will be 30% plus Medicare levy, so essentially 32% on income earned in that tax bracket. From $135,000 up to $190,000, you've got the 37% tax bracket plus Medicare levy, so essentially 39%, and then $190,000 upwards, you're in the 45% plus Medicare levy, 47% tax bracket. What that means is that the higher your income is, that the higher rates of tax you'll pay, sure, unfortunately, but also you're earning more income, but also the more the deductions will be actually worth to you. For example, if you're negative gearing on an investment property and you've got $10,000 negative gearing deductions, if your income is only $10,000 a year, you're not going to receive any tax benefit from doing that because your tax rate is already 0%. Whereas if your income's $200,000, then you're going to receive 47% of that back, so $4,700. So which tax bracket you're in impacts how attractive the tax strategies are for you, and that's why it's so important to understand what tax bracket you are in.